Hey guys, welcome to the Max Invest YouTube channel, and today we are going to be doing a market update and then briefly taking a look at some of the winners and some of the losers in the past couple of weeks. I'm the Max Invest YouTube channel, and if you like the video, remember to like and subscribe, and remember nothing said in this video is financial advice and you should always do your own research. So, if we take a look at the macro economy, we can see that the S&P 500 is sitting around 3,900. It has had a couple of down days off the back of one of the best weeks ever in the S&P 500, with 5 straight up days a few weeks ago. On the other hand, the ASX 200 has dropped off a little bit from 6,900 to just below 6,800, and in today's trading day for the first couple of hours, it's pushed back above 6,800 slightly. It doesn't seem like the markets are going up too much. Perhaps they are just stabilizing a little bit now. And I'm also going to tell you what I do think my outlook for the future is going to be in these markets. I do believe this year we are going to see at least 10% upside in the market from here. Well, from the beginning of the year. I think the S&P 500 will at least get to 4,100, 4,200, and the ASX 200 should break back past all-time highs this year. And one of the main reasons for that is because a lot of stimulus is going to be getting pumped into the economy. And of course we know when there's more stimulus, anything people are buying will be inflated, such as stock prices. So I do think this year could be a pretty good year for the overall broader market. However, I don't have a crystal ball and maybe it will not be. As we can see, the Victorian government had a recent lockdown. All this did mean, though, is there will be more and more stimulus coming in for businesses, and the lockdown is expected to cost around $1 billion for the Victorian government, and $143 million in business stimulus will be coming out on the Australian side. This should pump more and more money into businesses, which should help with the overall broader market, and it does show that every time there is a problem in the current environment, the government is moving to stimulus immediately, and stimulus is always the first response of the US or Australian government in any of these situations. So I can see this continuing to move further into the future with more stimulus being put up. Also, the 1.5 to 1.9 trillion stimulus package in the US is looking like it will be finalized in mid-March, around the same time as the crash last year. This stimulus package should give consumers $1,400 per person, and I am also thinking that there may even be more business stimulus packages in the US. All of this money to individual people will mean that anything they are buying is going to be inflated, such as stock prices, and we have already seen what stimulus did, and it's been one of the quickest market rebounds in history last year because of stimulus. I do believe that there could be even more stimulus in the US, and there have been rumors of discussions around business stimulus mid this year in the US. And if the pandemic continues to go on in the US, I would not be surprised to see even more stimulus coming out. However, there are a few concerning factors. We are already seeing inflation in everything people are buying, such as assets, stocks, even cryptocurrencies, and bond yields are beginning to rise. Of course, if inflation begins to get out of control, the stimulus will need to get cut back and rates will be risen, and if rates rise, that should mean there will be a big pullback in the overall market. However, economies remain shut down overseas. What this basically means is money velocity will remain low. Money velocity effectively means the amount of times money will circulate. It's currently at around 5, meaning money will circulate 5 times before it gets put into savings or other things. The way to calculate GDP growth is basically, or how much the GDP will grow, is multiplying money velocity by the amount of money supply. If we went back to our old money velocity, GDP would grow a significant amount with all the new money that's been supplied into the economy, and we would see inflation. But since money velocity is so low, all of the new money that has came into the economy is basically not being spent right now, and we may not see this inflation for a while. This does mean that if inflation is postponed, it looks likely that the governments will continue with their modern monetary approach and continue with stimulus in the economies, propping up the market for this year and allowing a 10 to 15% year to come as a result. Let's look at some of the big stock winners in the past week. Well, in the past few weeks, Treasury Wine Estates has just been going up and up and up, and recently having a slight pullback, but it's on a clear upwards trend. The first reason for this is because of the GameStop crisis, reducing short positions on certain stocks like Treasury Wine Estate, which had some pretty heavy short interest in the stock. Also, TWE recently released earnings, and of course they weren't that good, but everybody already knew they wouldn't be that good. And it did show they're actually lowering their debt, and they had some good plans for diversification and good plans for what will be happening in the future. This led to Macquarie updating TWE's price target to $11, which shows that TWE will probably be going decent in the future, and this has been one of the big winners in the past weeks. Square is another big winner, and this is off the back of Bitcoin continuing to rise. Bitcoin reached 57,000 USD after big things like Apple saying they're accepting Bitcoin and Tesla now putting Bitcoin on its balance sheet. Square has been a winner of this. Their balance sheet is partially Bitcoin, and Square's Cash App allows people to buy and sell Bitcoin. Of course, the more transfers of Bitcoin, the more money that Square will make. Square's a pretty good company. They've recently started advertising for small businesses within Australia, where I'm located, and I'm pretty happy to see Square's massive price increase. In the past 2 weeks, it's increased from roughly $200 to $280, which is nearly a 40% increase in Square's stock price. So, Square has also been one of the weekly winners. Now I'm going to look at one of the weekly losers, which is a little bit of a surprise with Bitcoin's massive increase off the back of a ton of news. Tesla has had a drop in their share price from around the $880 range right back below $800. There has only been good news for Tesla and good outlook for Tesla. However, I do believe the reason Tesla is falling so significantly is because the price already shot up so much, and the catalysts for Tesla's price to rise further need to be significant. We're looking, with a $780 valuation, we're looking maybe, 5 to 10 years down the road with Tesla, which is almost a little bit much for the market, and I do expect Tesla's price will come back a little bit, maybe to the low 700s, high 600s, which is a far fairer value for Tesla. I do believe Tesla's business will 10x in the next 5 or 10 years, but I'm not sure if the stock price will do that as well. So it will be interesting to see what this stock will do into the future. Let's take a look at what to look out for. We want to look out for money velocity, because if money velocity kicks back up, we're going to start seeing inflation. However, I don't think it will move too much in the oncoming months with lockdowns continuing. Stimulus dates and quantities are also important for the broader macroeconomic market. And we should also be looking at the Fear and Greed Index, which I will show you briefly after this. Also, it is earnings season, and a bunch of companies have released earnings in February, such as Google, Apple, and heaps of other companies. Appen are going to be reporting earnings on February the 24th, which is very important because they recently got a downgrade from a Macquarie analyst, and it looks like the future for Appen is not that great right now, and this is heavily priced into the stock. So, if earnings become a lot better for Appen and they show that they have some signs of doing decent this year, I do think the stock will shoot up, and this is a very important one to look at. Tattooed Chef are also reporting earnings on February the 26th, and I do see Tattooed Chef doing pretty well here. And we should also be looking at Golden Nugget Online Gaming price movement if you're in the stock. It's an interesting one, and it's dropped down a little bit recently, so we do want to see when it's looking like it's going to rebound, and I do think that'll start happening early March. Alright, as I said, we should be watching the Fear and Greed Index. The big reason for this is it shows when people are very greedy with stocks and they're buying tons of stocks, or when people are very fearful with stocks and they are not buying as much. As we can see, if we directly correlate the fear and greed over time with the overall market, we can see where the best points to be buying are and the best points to be, well, not buying are. As we can see, at the end of 2019, there was extreme greed. The fear and greed index was at nearly 100, which is the greediest it's ever been. Of course, in 2020, the fear and greed index then dropped to roughly 10. As we can see, if we bought at the beginning of 2019, or at the end of 2019, just before the crash, when everyone was very greedy, the stocks would have gone down a significant amount. However, if we bought when everybody was fearful at around 10, the stocks would have then gone up significantly. In fact, we can see the correlation is completely direct. Any time when people have been fearful in the past has been a good time to buy, and any time when people are greedy has not been a great time to buy. As we can see now, we're somewhere in the middle of extreme fear and extreme greed, and buying on the days where everybody is fearful is a good idea relative to the days where everyone is greedy, and this is something everyone should be tracking in the macroeconomic market. If you enjoyed the video, remember to like and subscribe, and thanks for watching.